Welcome to our deep dive into the Nepal Stock Exchange, or Nepse, that little market nestled amongst the Himalayas that's about as predictable as a yak on roller skates. Today we're exploring the top 10 reasons why this market is so volatile, because frankly, trying to figure out Nepse is like trying to have a rational conversation with a pigeon wearing a tiny top hat, utterly baffling, but strangely compelling. We're going to unpack the unique cocktail of factors that make this market swing more wildly than a monkey on a caffeine bender. From its tiny size to the speculative frenzy of its investors, to the government's tendency to change the rules more often than a toddler changes their mind, we'll leave no stone unturned. So buckle up, grab a cup of tea, or a stiff drink, we don't judge, and get ready for a wild ride as we dissect the fascinating, frustrating, and often hilarious world of Nepse. First up, let's talk size, or rather, the distinct lack thereof. See, Nepse is what you might generously call petite. We're talking smaller than a Kardashian's patience in a traffic jam. This lack of market capitalization means there simply aren't that many stocks floating around. And fewer stocks, my friends, means less liquidity. Imagine a swimming pool with only a thimbleful of water. One splash from a toddler, or in this case, a modest buy or sell order, and the whole damn thing erupts. It's enough to make even the most seasoned investor reach for the smelling salts. Because in Nepse, even the slightest breeze can feel like a Category 5 hurricane. So, if you're looking for a market where even a small-time investor can make a big splash, well, welcome to Nepal. Just be prepared for the tidal wave that might follow. Now let's talk about the humans involved, specifically, the Nepali investors who treat Nepse less like a stock market and more like a high-stakes game of charades. Fundamental analysis? Pshaw! Who needs boring old financial statements when you have rumors, gossip, and the unshakable belief that your taxi driver's cousin's barber knows a guy who can predict stock prices with uncanny accuracy? It's a herd mentality on steroids. One whiff of a hot stock tip and everyone's piling in, sending prices soaring higher than a Himalayan eagle. Until, of course, the inevitable crash landing. Because when your investment strategy hinges on whispers and wishful thinking, you're bound to get burned. It's enough to make you wonder if they should rename the Nepse index to the FOMO 500. Hold on to your hats, folks, because things are about to get even wilder. Remember those government policies we mentioned earlier? Well, in Nepal, they're about as consistent as the weather on Mount Everest. One minute they're handing out tax breaks like candy, the next they're slamming on the brakes with stricter regulations than a kindergarten classroom. And don't even get me started on the Nepal Rashtra Bank and the Securities Board of Nepal, those regulatory bodies that love nothing more than to keep investors on their toes with surprise policy changes. It's like playing a never-ending game of regulatory whack-a-mole, and frankly, it's exhausting. No wonder investors are jumping in and out of the market faster than a politician changes their stance on a hot-button issue. It's enough to make you want to just bury your savings in your backyard and hope for the best. Banks, the sugar daddies and mommies of Nepse. Let's talk about banks, baby. Because in Nepal, they're not just financial institutions, they're the lifeblood of the stock market. See a big chunk of those stock investments? Yeah, they're fueled by margin lending. Basically, loans from banks that are about as risky as a Tinder date in a pandemic. Now, when interest rates are low, everyone's throwing money at the market like it's going out of style. But the second those rates start to climb, it's like someone yelled fire! In a crowded theater, everyone's scrambling for the exits, leading to a mass sell-off that makes the Black Friday rush look like a leisurely stroll in the park. It's a vicious cycle of boom and bust, all orchestrated by the whims of the banking sector. And let's be honest, when it comes to financial stability, relying on banks is about as wise as trusting a fox to guard your hen house. Political roller coaster, hold on tight, or maybe just close your eyes. Ah, Nepal, a land of breathtaking beauty, ancient temples, and political instability? Unfortunately, yes. This Himalayan nation has seen more governments than a Kardashian has had Instagram followers. And with each change in leadership comes a whole new set of economic policies, leaving investors scrambling like a pack of rats in a maze. Elections? Cue the market jitters, new coalition government, buckle up for a wild ride. It's enough to make you wonder if they should offer therapy sessions in the NepseAnalyaia trading floor bathroom stalls. Because let's face it, when it comes to investor confidence, political instability is about as welcome as a skunk at a picnic. Where have all the big fish gone? The case of the missing institutions. You know what Nepse is sorely lacking? No, not just common sense, though that too. I'm talking about big institutional investors. We're talking pension funds, mutual funds, those deep-pocketed players who bring stability to a market like a weighted blanket on a particularly anxious Tuesday. But alas, in Nepal, it's mostly just us regular folks, the retail investors, left to fend for ourselves. And let's be honest, we're about as emotionally stable as a toddler on a sugar high. 1 minute we're riding high on a wave of optimism, the next we're panicking and selling off our shares faster than you can say, margin call. It's a recipe for volatility, my friends. Because without those steady institutional hands to temper the swings, Nepse is left at the mercy of our collective and often irrational exuberance. Variety is the spice of life, or so they say, but in Nepse, it's more like a bland diet of rice and lentils with a side of financial risk. Why? Because this market is about as diverse as a penguin colony in the Sahara Desert. We're talking banking and finance stocks galore, with a smattering of hydropower and tourism thrown in for good measure. So, what happens when those core sectors hit a rough patch? The entire market goes down with them, like a sinking ship with a particularly inept captain. It's enough to make you want to diversify your portfolio with investments in yak milk futures or something. Anything to avoid the concentrated risk that's baked into this market like a bad batch of momos. Remember those margin loans we talked about earlier, the ones that feel Nepse like a shot of espresso to the heart? Well, they come with a nasty little catch margin calls. See, when the market takes a tumble, and trust me it will, those friendly banks come knocking, demanding their money back faster than you can say liquidity crisis. And if you can't cough up the cash, well, they'll happily sell off your shares at whatever price they can get, sending the market spiraling even lower. It's a vicious cycle of debt-fueled speculation and panic selling, with retail investors often left holding the bag. It's enough to make you want to swear off margin trading forever and invest in something safe and boring like, I don't know, a savings account. Nah, who are we kidding? This is Nepse. We live for the thrill of the gamble. You know what they say, the grass is always greener on the other side of the foreign investment restrictions? That's right, in Nepse, foreign investors are about as welcome as a vegan at a barbecue festival. See, Nepal has this thing about keeping its stock market all to itself, like a kid hoarding their favorite candy bar. No foreign direct investment allowed. Now some might argue that this protects the market from the whims of global capital, but let's be honest, it also deprives Nepse of much-needed stability and liquidity. It's like trying to build a campfire with damp wood. You might get a few flickering flames, but it's never going to truly ignite. And until Nepal opens its doors to foreign investors, this market will remain a volatile playground for domestic players only. And finally we arrive at the dark underbelly of Nepse, a place where shadowy figures whisper stock tips in darkened alleys and insider trading is as common as a cup of masala chai. Yes, my friends, we're talking about market manipulation. Because in a market as small and opaque as Nepse, it doesn't take much for big players to move the needle. A well-timed rumor here, a little insider information there, and suddenly, stock prices are soaring or plummeting like a Himalayan griffin on a sugar rush. It's enough to make you want to invest in a good pair of binoculars, just to keep an eye out for those shady characters lurking in the shadows. Because in Nepse, it's often a case of survival of the fittest, and those who don't play by the often unwritten rules are often left licking their wounds. So there you have it, the top 10 reasons why investing in Nepse is about as predictable as the weather in a monsoon season. It's a wild, often chaotic market, driven by a unique blend of factors that can leave even the most seasoned investor scratching their head. But hey, who are we to judge? After all, there's a certain charm to its unpredictability, a certain allure to the possibility of striking it rich, or losing your shirt, in the blink of an eye. Stay tuned for our next video where we provide insights on how to navigate this volatility and invest wisely in Nepse. Don't forget to like, share and subscribe.